If you know what prepayments and revenue are, do you know how to record them in the accounts? I'm Thomas Harwood and welcome to the Accounting Student, where we create free and short videos so that you can learn about accounting. Today's video is looking at how to record prepaid revenue in double entry. Referring back to the video on what are accruals and prepayments, a prepayment, as the same as an accrual, is an adjustment to match the revenues used in a period. Prepayments play a key role to make sure that the financial records show an accurate and unbiased reflection of a business and its activities. Prepaid revenue occurs when the amount received into the business is higher than the amount of the revenue made. The extra revenue received is an advanced payment from another party which relates to the succeeding financial period. Consequently, the prepaid revenue needs to be deducted from the amount received to arrive at the amount to be transferred to the profit and loss account. This treatment follows a principle for prepayments where it is mentioned in the video on what are accruals and prepayments, whereby for accruals you add and for prepayments you deduct. So accruals add, prepayments deduct. Let's have a look at some examples to demonstrate prepaid revenue. Pete owns several properties which he rents out. The majority of tenants for Pete pay their rent on the date in which the rent is due or at a later date whereby an accrual is made. One of Pete's tenants at the start of the year decided to pay 2 months of rent in advance. This is the first time Pete has ever had a tenant pay up front for rent. How will this be recorded in the accounts of Pete's business for this month? The first step to take would be to identify the amount of revenue received from the tenants. So for this month, Pete received £4,500 from the tenants, which includes the 2 months rent in advance. To add this to the accounts, it will be added to the credit side like so. It will have the detail of bank because this is the other account that is affected by the transaction. Next, we need to find out the amount of rent which was initially expected to come into the business for the month, and then we can identify the amount of which is a prepayment. The amount received from the tenant of £4,500 covers the rent for this month and additionally the 2 months in advance. Let's assume that the rent is the same amount, and therefore the rent for each month will be £4,500 divided by 3, which is £1,500 per month. Therefore, the prepaid rent received from the tenant will be £1,500 times by 2, which is £3,000. Because accruals and matching concept expresses that the account should only relate to the activities that relate to the time period of those accounts, then we need to adjust the revenue by making a prepayment. As a result, we will deduct the 2 months prepaid rent to the debit side, and this will be a balance carried down because this amount will relate to the rent anticipated for the next trading period. Then, to balance off the account, £4,500 is on the credit side and £3,000 is on the debit side. So 1 month of rent, i.e. £1,500, will be transferred to the profit and loss account. So that was the explanation of how to record prepaid revenue in double entry. If you enjoyed it, press the like button. If you have a question you want answered, leave it in the comments below and we'll try our best to answer it. And if you're not already subscribed, make sure you click the red subscribe button to keep updated with the Accounting Student. Thanks for watching. We'll see you next time.